Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Connect, president of Universal Accounting Center, and it's my honor to have each and every week a new guest to actually share various things that you need to be considering as you're working on your business, offering quality accounting services and getting paid what you're worth. It's here in this podcast that each and every week we address topics ranging from marketing, selling, tech stacks, onboarding clients, training staff, mental health, just a variety of things that you need to be aware of as you're actually working on your business. It's also here that we actually have the experts to share their insights, various things that they feel that are essential for you to be successful, happy, and most importantly, get paid what you're worth. I'm excited to share today someone that's very important, someone that I'm eager to discuss with. It's Ahuva Gruen. She actually is a seasoned fractional CFO dedicated to transforming businesses and unlocking their full financial potential. With over 20 years of experience, she specializes in providing clarity and insights to entrepreneurs struggling with their finances. She is a former CFO of a large organization and has a proven track record of significantly increasing revenue, securing financial and expanding services. Now, as the founder of her own business, Ahuva leverages her CPA and CFO backgrounds so that she can actually guide companies toward growth and profitability. With a focus on strategic analysis, she collaborates with clients to make informed decisions, optimize pricing, and eliminate financial obstacles. By joining clients in her C-suite, she's able to actually help them be visionary advisors and, most importantly, empower her business owner clients to actually soar to new heights and achieve their long-term goals. So, Ahuva, welcome to the show.
Thank you, Roger, for having me on the show. I'm so excited to be here today.
This is an honor. Yeah, one of the things I want to do, though, is I'd like to start with your story. Let's get a little bit of a background here as to how you got into accounting. Why become an accountant?
It's a great question. When I was a young child, at 5 years old, was my first real exposure. My mother had a beauty salon, and I convinced my kindergarten teacher to go and get her hair done by my mother's place. Not that my mother sent me up, but I felt that would be best for her. So I was natural as a kid as a salesman.
Oh,
By the
good.
time I was 10, I had I grew up, my mother had a business in the home. And by the time I was 10, I had my first business. I sold candy. I bought it wholesale in the neighborhood, in the wholesale store. 7 cents sold to a quarter in the neighborhood, in school by recess, on the school bus, in a sleepaway camp, where we went away for the summer, wherever I was. And it grew until I had to stop in school when my principal said, if you don't stop, I'm at the end of sixth grade, she said to me, you're gonna get suspended. So then I stopped and I moved it elsewhere. By the time I was in high school, I was cutting hair. I had other little businesses. My brother had a lanyard business, bookbinding. So I was always a businesswoman. So it was natural when I graduated high school to go get an accounting degree, and I took my first office job. But because I was involved in my mother's beauty salon, I used to watch her work. I watched the business from when I was a young child. But then I became a bookkeeper in a company, and a year later I graduated with my accounting degree. So I became accountant, and then I, of course, took my CPA and moved up, and I was there for over 20 years. I left in COVID. While I was a CFO there, I'm a businesswoman, and my head goes to business and financial. For example, I went to an appointment and the other day, and the service provider moved into a more expensive office. And I made a comment about, I hope the overhead, I knew it was higher overhead, it's worth it. When I speak to people, even while I was from when I was a young teenager, my mind goes to financial, goes to business. So it was natural from while I was a CFO to help lots family, friends, neighbors with their financial, with their business. And I saw a trend that bothers me to no end, that they were good at what they do, what services they provide, or what they sell, but they're not good at the financial end. And it bothers me to no end because it really affects the bottom line, and they could be doing so much better and have so much more peace of mind if they had the financials. So when I left my company in COVID and I thought what I wanted to do next, I decided it's time I went off on my own to follow my passion and to help businesses grow and succeed. Businesses that don't need a full-time CFO but need the financial help to really succeed. And I must say that my father said to me when I didn't want to finish the CPA, I was working full time, I was raising a family. My father said, "You start, you finish." And when it was after by COVID in the summer, sitting by my sister's pool with my mother and sister, and my sister said, "If you want to start your own business, it's now or never."
Well, I
So
appreciate that story
that's
because
really like my background.
yeah, one of the things I appreciate about that is the fact that clearly at the very young age of 5, you were already an entrepreneur. So it was clearly something that you were exposed to, familiar with, and you saw that in your family. But with the accounting trajectory that you had after becoming a CPA, you moved through the corporate ladder. I mean, obviously, moving up after 20 years of business, you did experience everything there to that of becoming a CFO. But after that corporate experience, clearly with COVID, you could have just gotten another job, moved into another
I
position.
could have.
But as you,
Yes,
yeah,
I could have gone. Our colleagues told me, go be a CFO of a nursing home, uh, or like a big company. But yes, there was personal things that I thought it was best for me, but also I decided to follow my passion. Like I built up a company, I put my heart and soul into the company. I was already helping my spouse at the time had a business. I was involved in family members' business, neighbors, friends, and I decided like it's time to I was in my 40s already. Like, if I don't do it now, then when?
yeah, well, your sister was definitely the catalyst there, as you mentioned, by the swimming pool. So that makes sense. So I'm very interested in now defining the difference between bookkeeping, accounting, and CFO related services. As a fractional CFO person, you're clearly doing something above and beyond what would traditionally be considered accounting or bookkeeping. So let's define those. What is it that a fractional CFO is doing for their clients?
Great, because I get asked this all the time. There's different areas. There's bookkeeping, which is data entry. Yes, and you have to have, I'm sure all the accountants on here know, CFOs, CPAs, tax CPAs know that we need to have clean books. I just had today earlier a new client and I'm cleaning up her books and helping them getting the processes and things really up and running and moving. And we were discussing by a leadership meeting. And they asked me for numbers of the accounts payable, accounts receivable. And because I'm still cleaning up, and helping the bookkeeper clean up the the reports and things, I said those numbers aren't accurate. There's no point in putting down numbers if it's not accurate. If it's going to be way off, we're not using it. It's useless if it's not cleaned up. If it's not accurate, you can't make business decisions on it. It's super important. So bookkeeping, data entry, it's really important. And some clients add-on service I offer bookkeeping, but it's usually that I'm guiding and I'm making sure that the bookkeeping is doing it right. Then, then there is the tax accountants,
Mm-hmm.
the compliance, what
Yep.
everyone calls the CPA. When people think CPA, they're thinking tax compliance. And yes, they're super important. We don't want to get in trouble with the IRS or State Department of Taxation. But that's just one side or one CPA for everyone is certified public accountant. But what you do with it is that you could go into tax compliance, like compliance, which is like taxes. You could go on auditing, or you could go to the CFO world. Now, accountant is like the board that you have accounting degree, but what do you do with it? Then there is staff accountant that work under a CFO or controller. Controller is more, some businesses it's the same and some it's too different. Controller is controlling the money, and CFO is what I do and what I love, and it's my passion, is not just controlling the money, but it's strategically what to do and where we're going and what and where we're leaking our money, where we could make more money, where we're leaving money on the table really to get the business to grow and succeed. If a client waits for taxes, for a business waits for taxes to see how much money he made, how well he did, is he losing money? Is he making money? Where is he making money? Where is he losing money? They lost a whole year.
I appreciate your explanation of those various services because I speak often of them myself. I refer to them as the three core accounting services that as a firm you should consider offering to your clients: the bookkeeping, accounting, the tax planning and preparation, the CFO and advisory. And you are correct. When you get into that CFO realm, you are actually dealing with not just the cash flow management, but more importantly, you're dealing with the business model. Is what the company doing a profitable model that if it continues to operate, will they be successful? And it is getting into the policies as it relates to the capital of the business, where they're getting their lines of credit. It's dealing with the accounts receivable, the accounts payable, the vendor relationships. It's that business model that's going to actually have that success, if you will, because of your influence. So one of the things I
Uh,
appreciate is the explanation you provided. So the next thing I want to
I'll
do,
add, could I
go
just
please,
add?
please.
I will add, besides for the reports, which yes, they're super important, but I really delve in. I'm really hands on. My model is for me, don't take a million clients. It's a very different model than the tax accounting firms that they take
Mhm.
many, many clients, but it's take less clients and more value and more hands on. I work with the 4 P's: people, which is employees and clients, processes, profits, their profit margin, the pricing, it all comes into that, and the products. And really, the reports tell us a story. But in order to change the story, I get into those 4 P's and see, depending on the businesses, what's going on, where, what's going wrong, what's working, what's not working. And that's really what I focus on.
Well, I love your
So,
4 Ps. I think that's excellent because that simplifies exactly what you're going to put your time and attention to. So, when you're optimizing things, what are some of the things that you try to optimize so as to improve high profit areas?
well, first of all, we work on profits to see. It depends on where the pain point of the client. If the pain point of the client is sales, what's going on? Are their sales good? Are they good? Are they getting the training? But a lot of times, if they hit already a million and 2 million, it's not the sales, it's profit margins. And if they don't have good profit margin, what is it? Pricing? Are they pricing right? Are they
Mhm.
having good processes with their employees? Are the employees effective? Are they following the process, the software? Are they using it correctly? Like, what is going on? I turned, for example, a construction business that was using deposits to fund operation, which we all know it's like that's bad news. I
Uh-huh.
turned around in the slowest month of the year, thank God, to 20% profit margin in the slowest month. So it's looking, they couldn't just raise the prices because it wouldn't to the sky on all services because there's industry standards,
Yep.
like to really what's going on, where we make money, where was it proposal wrong? Was it the employees did too much, did too little? Is it not an effective employee or move it around? Or some employees end up having to leave? Like really what it is. Different businesses is tracking their hours. It's a product. It's like what's going really, where is the pain point? Where are we starting from?
Yeah.
And
Now,
accountability. Counting stand for accountability. Talk is cheap. We have to make sure they follow through. Accountant told me that, and I love it. It's one
no,
of my
you're
favorite lines. Accounting could also stand for accountability. A client said to me, they thought of this idea a few years ago. It was a new income stream. So I said, "What happened? You didn't do it." I don't know. Well, we did it, and it worked. It was a new income stream, and it helped get more value clients. It helped all around.
Well, I can definitely tell you that as a business coach, accountability is one of the biggest things that I bring to the client relationships that I have, simply because of the fact that you're right. They've got a lot of great ideas. There's a lot of good intent that they have, but at the end of the day, unless it's implemented and actually put into place, it doesn't matter. And so, as a business coach, I'm
Right.
oftentimes helping accelerate the implementation of things that they clearly want to do. They just haven't been able to prioritize it. So, that's one of the things that I think is very important. Now, I do want to go back to something that you were sharing earlier as the distinction between CFO services and tax type services. You were talking about the number of clients. So I wanted to dive a little bit deeper into what you've experienced to be successful, which is the number of clients that you feel you can optimally serve. And what is it that your average fee is to serve those clients? In other words, how many clients are you working with effectively? What's that ideal client base? And what is it that your average fee is for those services that you're being paid to do?
Well, that's $1 million question. It depends on the size of the clients at the time and um, how many clients I could effectively serve. And usually it's more work in the beginning than later on when you really, and I do go above and beyond, but I have very important is boundaries and to make sure to get paid on time. I charge not by the hour, by the month. I have a meeting with them, seeing what's their pain points, what's their structure, what's going right, what's going wrong. I don't just give out a price off the hat. It's more
Hmm.
individual, which I think is much more effective. I think as accountants should move away from hourly billing
Yeah.
and really, and then I price it at 3 months. For the first 3 months, it gives the clients a more like a feeling that they're not tied in for a year, and it gives me safety that if I price too low, usually by now I do not price too high, but if I price too low, then I could raise it after 3 months, and it's also easier to sell if you go on the lower end, sorry, than if you go on the higher end. So
Yeah.
it all depends on how many clients and how big they are. And the pricing could go from 3,500 to like close to 10,000, depending on the value, depending on the, on the scope.
I love that. I love it. So you're basically saying your range right now is about 3,500 to $10,000 a month for services. How many clients do you optimally work with in a given month? How many are you currently working with now, for example?
I'm working with quite a few, but I don't like, it depends. There's some, really small, some high, a few, but I don't have hundreds of clients like the
Yeah.
tax accountants.
Well, I can definitely tell you that the firms I've worked with, they typically, depending on their business, work with as many as 10 to 20 clients, simply because of the fact that each month there's quite a bit of time spent with each of these clients.
Right,
And when you consider the
right.
fact that you've generally been working with them either on a weekly or a monthly basis, giving them as many as, say, all average is about 3 to 6 hours a month. Well, if each client is 3 to 6 hours a month and you've got 10 clients, that's a pretty hefty load that you're carrying there. But if your average revenue per client is, let's say, just at the low end of your scale, the $3,500, that's a good revenue stream of $35,000 each month that you're billing for your services, working with 10 clients. Yeah, you've got a healthy little operation that's running. So,
I will say that I work with the clients usually weekly or every other week. The problem is with smaller clients that I have to charge the lower end. The pricing has to make sense, A, with how much work we're going to put in, but
mhm.
also has to make sense with their income stream. They have to be able to s- to afford it. We don't, and a lot of time the smaller clients that I are on the low end, I end up really it should be every other week speaking to them, but because I'm in it for the impact, for I'm in it really to get them up and running and growing and doing well. I end up in the beginning speaking to them like once a week because the accountability, they usually need the extra help, really the extra. So I don't have 20 clients now. That would be nice, but I don't. But I don't think that if I had 20 clients when I'm working as a solo, I will get eventually someone to do some of the lower end work, it wouldn't be so effective. I don't have, thank God, a high turnover rate because the clients know I'm invested. There's communication. It's not like the tax accountants are all great, but it's a different model. And a business owner told me it was more of a tax accountant. He feels like he's a pea in the pod.
Well, I like that.
That's not my style. I don't have like I I don't have as taking on me alone more than 10 clients because I end up speaking to them, and if they're bigger, it's a few hours a week. Really, I'm very invested in my client's success.
Yeah. Well, one of the things that I've found that differs firm to firm is their client interaction. So, for example, I know of a number of people that work with their clients on a monthly basis. So, once a month, they're meeting with the client, and they'll typically have about a 2-hour meeting with the client. There's the prep time preceding it, there's a little bit of time after the meeting. But if you consider that, that's a once a month meeting that you're preparing for and having. Others, and this is something more similar to myself, will actually meet with their clients twice a month, every other week. And by doing so, they find that there is a little bit more of a cadence to the work routine. You're able to have a conversation. They're able to actually implement things and you can follow up quickly because it is that accountability you mentioned a moment ago. They find that when you meet monthly, there's too much time in between. And although they have the best of intentions to do whatever it is you've discussed, they'll typically put it off, procrastinate, and oftentimes because the meetings are once a month, it's so often that you're finding that they didn't do what they meant or intended to do. So by having the meetings a little bit more frequently every other week, it does cause for things to actually happen a little bit more. It accelerates the implementation of things, and they do find a lot more success having at least a meeting every other week. Well, if you consider that you're meeting,
100%. I'd
yeah.
rather charge higher than take a client at very cheap and once a month. They're not gonna neglect. It's gonna
Hmm.
schlep out to see
Yep.
improvements. It's not you. I don't think it's such a effective model.
Yeah, I completely agree. Now, there are people that actually meet with clients 3 times a month, so not 4 times. That gives you a week that you can actually play with, but that's a weekly meeting with clients, and that's where you're dealing with somebody that's got a lot of challenges, a lot of things that need attention, a lot of things that need to be changing, and so that's a little bit more hands-on. But in either case, imagine, for example, if you were meeting with one client every 2 weeks. Well, you could have technically a client you meet with in the morning and another in the afternoon. You do that 4 days a week. That's basically 8 clients you can meet with every week. So you could, in theory, have clients as many as 16 that you're meeting with twice a month and comfortably manage that workload. So that's
Right.
16 clients that you're working with. Let's say your average is 2,000, 4,000. Just take your number and just multiply it by that 16 count, and you've got a pretty good practice that you're running there, right?
Right.
Yep. All right. So now regarding the services that you're offering, we talked about optimizing things and you talked about your 4 Ps, which I really appreciate. So I'd like you to address when you're evaluating the potentiality of eliminating low profit things, how do you evaluate what are some of those low profit services that you need to maybe assess and have a criteria for defining? What would that look like?
Well, we go through the profit margins, and once we have the profit margins, we have the conversation. If it's low profit margin, are we? Should we raise the price? Something you can't. If you can't raise the price, then why are you keeping it? Is it a lead magnet? Then fine. But if it's not a lead magnet, then why are you keeping it? It's not only the price; it's also the value of the client. Is the client not paying? Is the client, for example, a construction business, is the work site a mess, so everything takes longer? Then it has to be priced differently. In a professional service industry, like what's the client? Are they paying? Are they coming back and so needy that it's like eats up your time? I'm sure we all know that most businesses, 80% of the income comes from 20% of their clients. So it's also like the value, and it's for us accounting firms too. There was once a client that wasn't a good fit for me because they were needy as ever. they were not good at communication. The owner was doing things wrong. He didn't want to come on the calls. He put his assistant, who was getting way overpriced, and it's like, yes, I opened his eyes what was going wrong, but it wasn't effective, and it wasn't a good fit. You have to have a good fit. Sometimes you have to say goodbye to a client if it's not a good fit.
Yeah, that's very true. So I'm curious then, we're obviously into numbers. We like numbers. That's one of the things that we do. Do you have, let's say, some key performance indicators, some KPIs that you use to monitor the financial performance of your clients, some go-to numbers that you like to have that you feel represent whether or not the client is doing well?
Well, the net profit, gross profit, how much, sales, repeats, revenue, like the clients coming back. That's like some of the important KPIs.
I like that.
Cash flow is really important. I heard a great line that I love. Revenue is vanity. Profit is sanity, and cash flow is reality. I think that's so like sums up things. You need the vanity, you need the sales, because if there's no income coming in the door, it's business can't survive. You need the sanity, the profit, because if you have sales, I showed a client the other day. It looked like 1 month he had great sales, but when I looked at the number, he sold something, whatever his reasoning was, at like basically cost. So it was money in, money out.
Yep.
So it's vanity. If you don't have the sanity, in reality, it's not going to get you anywhere.
Oh, I
So
totally love
so
that.
the sanity, the profit margins is sanity. We all know every business needs the sanity, need profit margin to really make it. But you also need the reality. If you don't have good processes and the business and their customers owe them for 2 months, 3 months, you can't. The reality is cash is king. They won't be able to function. So
Yeah,
you need those 3 pieces.
Yeah, you've hit on the 3 key things that I think every business owner needs to consider. If you're not growing your revenue, you're dying. If you're not making money, why are you in business? The ROI, and cash flow is king is exactly right. If you don't have the cash to pay the bills, you're just going to die. So those 3 things are very important metrics to have. I would add to this a variety of other ones. I think it's very important to understand various things such as the cost per acquisition, your lifetime value of your customer, your average revenue per customer. You need to be looking at things as to the trends with these various trends show whether or not the company is improving in these margins and so forth. So
100%.
yeah, KPIs, very important. These are the things that I think the client really appreciates from us, because it's where we're able to help the numbers speak to their experience as to running the business. So very much agreeing with the idea of that. So here are some questions that I have as it relates
And
to.
I just want to add in, it's much easier to keep a customer and keep happy. It has to make sense than trying to get new customers. It's important for my clients and important for us as accounting firms that it's much better to keep the customer than if there is a client that has bad reviews or customers complaining, then we have to dig in. What is going right? What's going wrong? What's the story behind it?
Yeah, what you're
And
talking about
improve it.
there is, yeah, you're discussing lifetime value of the customer, but at the same time, what's called their net promoter score, as well as their customer relations. So you're dealing with a number of things here that obviously as a CFO, you can impact and help educate the business owner on. So I like that. So here's what I'd like to do for my listeners. I've got some great information that I'd like to share with you. Basically, there is a 10 biggest mistakes that business owners make and what they can do to avoid them. These are the top 10 business mistakes, a PDF that you can get and actually see what it is you can do as a CFO to address these to help help them avoid these and, more importantly, improve the situation of your clients. So what I'm doing is I'm sharing in the episode description something that Ahuva's actually provided here, which is her top 10 biggest mistakes that business owners are making and how to avoid them. It's a PDF that you do not want to miss. Get a copy of that today. In addition, I want to share with you from Universal Accounting the book Red to Black. These are these are the principles that you need to actually use to turn a business from being in the red to being in the black. It is a how-to guide for accounting professionals to actually not only service your clients, but also get paid what you're worth in this capacity as you're working with the cash flow of the company. So definitely get this how-to guide. It is a book written for accounting professionals to help take your clients from being in the red to being in the black as a profit and growth expert. In addition, I want to actually suggest to you that you get a book called Your Strategic Accountant. This is the book written to actually help you understand what are the core services that you need to be providing to your clients to better service their needs and, more importantly, get paid what you're worth as you're actually providing them as the premier accounting firm in their area. It's addressing those three core services that we discussed earlier in the conversation. It's what you need to know about them and how to best provide them so that you can, in fact, be the premier accounting firm in your area. Now, as for this, I'd
Could
like
I
to
just
actually,
add one more thing?
please.
When an accounting firm is servicing a client, they should also think, just like the client, what money they're leaving on the table.
Mhm.
What other services could we be offering? What do they need? A lot of time clients don't even realize what they need, but they could be doing so much better if we offered them the service.
I completely
Really
agree.
like think ahead and really like what they need.
Yeah, as accounting professionals, I feel that we don't really utilize our skills to the best of the client's needs. What I mean by that is there's a lot of things that I feel we could be doing for which we could be paid if we just simply considered the needs of our clients as it relates to either accounting, bookkeeping, tax planning and preparation, CFO and advisory. Lots of services here that we can bundle into various packages and better service our clients in their current situation. So, love what you're saying there. Now, Ahuva, one of the things that I'd like to do is I'm going to come back to you for a closing thought. But as a summary of our conversation, I just wanted to kind of restate she obviously, with starting her business, came from a background in corporate. And it was with the motivation of her sister at the swimming pool to simply say, why not go out on your own? That I think was that catalyst to go back into that entrepreneurial spirit that she clearly had from when she was younger. Now, as a CFO, she was leveraging her experience as a CPA to not only provide the traditional accounting services of bookkeeping and accounting, but definitely getting into more that CFO level. And one of those things that she pointed out as being so important is the accountability that she brings to her client relationships. It's realizing that a lot of times businesses get caught up in the day-to-day operations. The business owner has great ideas, things that they'd like to do, but at the end of the day, they fail to implement them. But with her as the CFO, she's able to bring those things to the surface, prioritize them, and help them become a little bit more accountable in implementing them. And behold, they actually have some success in doing the things that they intended to for so long, oftentimes. In addition, we talked about things that we can do to actually identify in the business those 4 Ps, things related to the people, the processes, the profitability, and most importantly, the product that the company offers. I thought that was a phenomenal insight as to what we can be offering as we're focusing on our clients' needs at that people level, at that product level, at that process level, at that profit level. So if we actually get into those areas of the business, we can impact them because all of them are numbers based. And that's where we then discussed about metrics, key metrics. What should we be focusing on? And we shared a variety of things that are numbers that we should be observing. But lastly, it's basically focusing on those high impact things that can produce things at the top line, which is the revenue, at the bottom line, which is the profit, but most importantly, the cash flow, what it is that the business needs in order to remain operational. So wonderful discussion today. I love the conversation. So Ahuva, what else would you like to leave as a final thought?
Do what you do best and delegate the rest. I tell that to my clients. I do it in my own business, in my own life. Do what you do best. Focus on the high impact, like a book I read, Great at Work. Do less and obsess. And really, that's what I really believe. And words are it's cheap action.
Very good. I like action. Action is definitely something that needs to be in place. So, with all that being said, I'd like to actually invite you as a listener to, if you haven't already, subscribe to the podcast. Love to have you actually get notified each and every week when we release a new episode. Various things that you need to be considering as you're working on your business to build a premier accounting firm in your area. In addition to that, I'd like to encourage you to visit universalaccounting.com to find in the podcast section through the navigation of the site the highlights or playlists that we've compiled of past episodes, those excellent episodes, discussions, interviews that I've had where we've dove into various things that you need to consider today as you're running your business, things that are perhaps timely for you now: marketing, selling, pricing, tech stacks, training staff, onboarding clients, retaining your clients, mental health. All of these topics have been put together into playlists that you can go binge listen to based on your current situation and the needs that you have. I'd like to also invite you to GrowCon. GrowCon is an annual conference that we have where you need to attend and hear from the experts what it is you can be doing to work on your business. We address things ranging from marketing, selling, but more importantly, the accounting services that we can be providing, but also how efficiently we can be doing so, leveraging technologies today to be more productive and, most importantly, profitable. So come listen, hear from the experts, and see what it is you can be doing to actually have the premier accounting firm in your area. In addition, meet your peers. Come and make some great friendships, make some wonderful connections, see what it is that others are doing to build their business, collaborate as well to perhaps better service your clients, and likewise, at the same time, come and meet my staff, those individuals here at Universal Accounting Center that are committed to your success, helping you be in business for yourself, but not by yourself with Universal Accounting. Lastly, as it applies to these principles that we've been discussing today, become a profit and growth expert. Go to universalaccountingschool.com and there find out the information that we have regarding the various programs that Universal Accounting Center offers to help individuals get the skills, the confidence, and the competence to go out and offer quality accounting services and get paid what they're worth as professional bookkeepers, professional tax preparers, and profit and growth experts. So go to Universal Accounting School and find out what more you can be doing to not only improve your skills, but also train your staff and offer these services as the premier accounting firm in your area. Lastly, if you have questions regarding these concepts or principles and would like to discuss them, give us a phone call. You can reach us at 801-265-3777. And always remember this: accounting success is universal. Take care. Have a great day and be safe out there.
Thank you, Roger, for having me on the show.
I hope it was wonderful. Thanks you. First of all, that was great. I'm curious, if you have the chat in front of you, could you do that promotional piece that we shared a moment ago?
We're still on the air?
Yep, we are. You're going to record that promo piece there.
Hi, this is Ahuva. It was great and fun to be on Roger's show on the Universal Accounting, and we discussed about the 4 Ps in servicing our clients. We spoke about which ROIs and really how to best service our clients, not to leave money on the table, and our clients shouldn't leave money on the table, and how to give the most value to our clients and be successful accounting firm. Thank you. I'm inviting everyone to listen and join us and to learn and how to do better.